Hi, and welcome to today's video of Bank It or Tank It. I'm Chad Shoup, and today we're going to be breaking down one stock. We're going to be looking at its fundamentals, the sentiment going on for the company right now in the investment community, and the technical analysis on its price chart for the sole purpose of figuring out whether or not this is a stock that we can bank on going higher or if it's a stock that's going to tank and head lower. But before I jump into that today, I just want to give you a moment to scroll below, right below this video, and click subscribe so that way you don't miss out on any of my weekly insights and all of my stock market information that I post on YouTube. You'll be able to receive that content right away. And of course, if you have any questions or comments, you can leave those below the video as well. And I always appreciate your feedback, but more importantly, I want you to help me with the stocks that I'm going to pick for my upcoming Bank It or Tank It videos. And in particular, just take a look at your portfolio and look at what maybe you have the biggest holding in your portfolio, a large stock that maybe you're really concerned about, or you just would like to get more insights on. Just drop it in the comments below and I'll be sure to feature it in an upcoming Bank It or Tank It video. So for today, we're going to be taking a look at Roku. So in today's Bank It or Tank It, we're going to be breaking down everything there is to know about Roku. And that starts with what the company does. So when you look at Roku, if you're not familiar with them, they are a company that makes devices to help with the streaming wars that are going on right now. But Roku doesn't really have a dog in the fight. They don't produce their own content. Instead, Roku streams others' platforms on their devices and just gets revenue through ads. So their whole purpose is generating revenue through ads by allowing others like Netflix and YouTube TV and Disney Plus and Apple TV Plus on their platforms, on their devices, to just broadcast their content, and then Roku sits back and collects a stream of income just based on ads that they get to run on their devices to their consumers. So Roku is taking a unique approach at this. We've seen all the big dogs in the fight, that Amazon, Netflix, Apple, Disney Plus, they're all creating unique content to pull in consumers during these streaming wars. Meanwhile, Roku's just sitting back and just benefiting from the influx in streaming devices. But full disclosure, I have to admit, I don't have a single Roku device in my home. And we actually stream everything. We don't even have a cable plan. Instead, we just have internet, and then we have the streaming services. We have Netflix, Disney Plus, Apple TV Plus, and that's about it. That's all my kids really watch. We use Sling sometimes too, and it's just on a monthly basis, just whenever they're ready to watch TV, because truthfully, they don't do it too much. We're so active and busy, and just with Netflix on demand, they end up watching most of their content through that and Disney Plus. But the devices that we do have already have us covered. We have the Apple TV, we have the Xbox, which streams multiple platforms on it, and then we have a smart TV. So we're pretty much covered, and none of these items are branded by Roku. So I really don't have any experience with their devices. So this is not a product review at all. Instead, we're going to be focusing on the company and, more importantly, what its stock is expected to do in the coming months. And we're going to start by looking at the stock's earnings, and then we're going to look into their most recent earnings report. Now, when you look at the latest earnings report for Roku, they knocked it out of the park. Their earnings were ahead of expectations. Their revenue was ahead of expectations. Their subscriber numbers were growing. Their content platforms were expanding. Everything was looking great for the stock based on its earnings. And yet, when the company announced earnings, shares tanked. Take a look at this article that summarized what was going on for the company in the quarter. Look, they say Roku stock tanked more than 14% in after-hours trading after the company reported its results. The company reported average revenue per user of $22.58 compared with the previous quarter's metric of $21.06. So that's a big jump in average revenue per user that they were experiencing. And Roku expects its recent acquisition of Datexu to drive revenue growth throughout Q4. And in this quarter, they also increased guidance for the rest of the year. So this was a very bullish quarter when you looked at what the company was saying and how they were viewing their business model at the time. But if you look at the title of this article, shares tanked on the news. Despite a revenue beat for the third quarter, the increased revenue guidance, everything that was going on that was very bullish for the stock at the time, it didn't matter because investors still had got ahead of themselves for the share price. And even though earnings beat expectations, which that's the bottom line key, that when you go to look at a stock, that's the main piece that's going to move the market. And in this case, it came out better than they expected, and yet shares still tanked. And this actually brings up a great point that I can talk about based on earnings, and it actually comes in from a comment that I got in one of my videos recently. Nicholas wrote in, he said, is it possible to calculate the upcoming EPS, earnings per share, before the company releases the report. So to that, I would say it is possible. You can go in, you can spend all the time and resources analyzing the company to predict how earnings per share are going to come out. But of course, you're doing that for the sole purpose of having an edge on the market when the company announces earnings. So take this Roku earnings report, for example. Let's say you spend all this time and resources and energy into figuring out that Roku is going to have a great quarter. Their earnings were going to be better than expected. Their revenue was better than expected. They were growing their base of users, and they were going to increase guidance. So you have all these bullish factors built into this one earnings call. You knew the company was going to blow it off the top with this earnings call. They're going to be extremely bullish, and investors would just eat it up. This was a great opportunity to be bullish on a stock heading into this report. But then you look at what happened. Shares cratered 14% on the news. And it just goes to show that it doesn't matter how much time and resources you put into figuring out what earnings per share should be or what it's going to be. You could be right, 100% right, but still be totally wrong about how the stock is going to react. That's because there's so many other factors that go into how the stock trades after earnings, before earnings, everything that's going on. There's a ton of factors. So instead, I don't like gambling on earnings. I like to follow a proven strategy that's going to help you generate returns no matter what's going on with the stock, because these are historical patterns that tend to show up again and again. And I've actually developed one based on earnings, but the trick is to not buy before the earnings announcement, but instead wait till the earnings are announced, then look back historically about how the earnings match up with the historical analysis. And then from there, you can get an expected path for the stock for the next month or two before we get into the next earnings announcement. So if you want to learn how I trade these stocks around earnings and how I generate the consistent returns that you can't find jumping into a stock before earnings, but still generating phenomenal results that see these huge jumps of 5, 10, 20% for the stock in just a matter of weeks, then you can scroll below and I'll have a link below this video that'll tell you more about it. But for now, just know that gambling on earnings is not the approach that you want to take. If you want to learn more, just scroll below. So now we're going to move on to the quick comps, or the comparable companies that we can look at with a fundamental analysis. And we did this last week with Under Armour, to where they had a few different companies that we could look at just to see how they measure up. But with a stock like Roku, that just doesn't exist. You look at their competitors in the market right now, and it's Netflix, it's Disney Plus, it's Apple TV Plus, it's Amazon, even Google. But these are large conglomerates that have businesses across the whole wide spectrum, not just content, not just streaming, but they do a ton of other things too. Netflix is probably the closest, but they're spending a ton on content, and they have their own streaming platform. So in fact, they're not even on the same level. And so there's just no way to really gauge how Roku is doing compared to its competitors. So we don't have to worry about that, but that may be a key benefit for the stock because they're taking a unique approach into this sector to benefit from the streaming wars. So it's something to keep in mind, but it's just not something that we need to dive into for the analysis right now. Now, the next one we're going to look at is how the investment community rates the stock. And you can see here on this chart, this is from the S&P Capital IQ. There's 15 analyst recommendations included in this average, and it's rated a buy. So it's nice to see some decision here. Last week, again, we were on Under Armour, and it was rated a hold, which basically meant that analysts didn't have a clue. So at least they clearly feel bullish, and that gives us an idea that the investment sentiment on this stock is bullish into the upside right now that we're looking at Roku. Now let's look at some key stats, and the two that I like to focus on, and of course there's a ton of other metrics that you can look at, but the bottom line, we want to look at revenue. We want to know that the top line is growing, and net income. That's the bottom line. So we want to see earnings and revenue growing in tandem, and you can see on this chart that net income is the bars on this chart, and I wanted to use bars to show that it's negative right now. You can see that it's in the red, it's below the zero line. So net income, they're actually losing money, but you can see that that changes once you get out to 2021. And what that tells you is that the investment community is going to get tired of taking losses if they don't start to see this turnaround. So they're on a short leash, but over the next couple of years, they really got to prove that they can turn the increased revenues that they're seeing. You see the steady climb in revenues on the chart, that they can turn that into some physical profits for their shareholders. So that's going to be a key development for the stock in the coming years, is are they able, just off this ad revenue, without having any content and being just this provider of devices in the streaming wars, can they produce that profit on the bottom line that the investment community is going to be looking for? And before we move on from the key stats, though, I did want to show that for Roku specifically, I talked about how unique they are. Here's the three metrics they really focus on, the investment community focuses on, and you can see that streaming hours are steadily climbing. They've really improved over the last couple of years. Active accounts, this is just the number of people that are using Roku devices, Roku accounts, and you can see that's growing as well. And average revenue per user, which is huge. That's the revenue, that's the top line. But not only are they growing their user base, they're also growing the amount of revenue they generate per user. And that's why we see the average revenue per user, it's basically doubled. Active accounts has basically doubled since 2017. But streaming hours, that's gone from just 3.5 billion to more than 10 billion. So it's almost tripled on streaming hours. And that's partly due to the increase in the users and the active accounts that they're seeing on their devices. All right, so now we get to my favorite part, and that's the price chart. This is where we get to take technical analysis and figure out the key levels that we're going to watch for Roku. And now, when we look at what we've discussed today, we've looked at the fundamentals, which were a little iffy because they didn't really have good comps to compare to see how the company was doing. They're losing money, so that means a lot of the other key fundamentals that you would look at are just not going to be there for the stock because they're at a loss right now. And then when you look at how the investment community reacted to the latest earnings report, the stock got crushed. So that really kind of plays into the fundamental value of the stock, that it's not really a bullish sign at the moment. But then when you looked at the investment sentiment on the stock, they had it rated a buy. So that was clearly a bullish signal. And now we're going to dive into the charts, and that's going to be the deciding factor in today's bank it or tank it to figure out whether or not this is a stock that I think is going to head higher or a stock that's going to tank and head lower. So let's dive in and take a look. All right, so I already have a chart on Roku pulled up with the key levels that I want to talk about today in the key analysis. So we'll start with the yellow line. That's going to be a 200-day simple moving average, and it's not really acting as a key level here, but I like to use it because it shows the main trend that's going on for Roku right now. Whenever the 200-day moving average is heading higher, which means it's angled up, which it is right now, as you can see, that means the stock's bullish and trending higher. If prices are below it and it's heading lower, that means it's bearish and heading lower. And if it's anything in between, then it's kind of up to grabs to do more analysis to figure out really what it means. So right now, it's clearly giving us a bullish signal that this stock is well above its 200-day moving average and trending higher. Now we'll look at the long green line on here. This is the major support area to keep an eye on. This is going back to the beginning of 2019. It's acted as a key level that's been tested twice already in this year, but bounced strongly higher in each occasion. So we're seeing a strong support level there that until it breaks below that, I really have nothing to worry about for the stock because you can simply set your stop loss below that support line, and then once it breaks below that, then you can close and get out of your position. But until then, it's a stock that's fair game to be trading either way, back and forth. And then this red resistance line up top, this is the key resistance level that's been formed over the past few months that we wanted to keep an eye on. And together, when you look at the solid red resistance line and the solid green line, even on a shorter term, it's starting to create this wedge pattern, which eventually is going to lead to a breakout. But you can see we can go well into 2020 where this price can just kind of still chop around inside of these key resistance and support areas. And in the meantime, it'll allow the 200-day moving average to flatline a little bit before the eventual breakout comes out of this wedge pattern that either pushes the stock above the resistance level and surging higher or below the support level and crashing lower. So until we get a breakout, the stock's kind of in a consolidation pattern. And I mean, you can look at it and there's plenty of opportunities here to trade these whipsaws because these are some major price swings on a $100 stock. I mean, it was down to $100 back in September, but then it was up 50% in just 2 months. So this is a stock that's really on the move and it really has some opportunities to trade it here as it's even stuck in a consolidation pattern. And the last thing I wanted to look at was the shorter term green dotted line and red dotted line. These are short term. It's a price channel of support on the green and resistance in red, where we see prices just bouncing within this range. And I think it's going to go, the next move is going to be back up to this red resistance line. And when we look at this as a whole, when you step back and look at the whole chart, the key thing to notice is the trend. You never fight the trend when it comes to a stock. And the trend for Roku is clearly up. This stock is heading higher. 200-day moving average is angled up, even though it's going through this consolidation period. And it may take until March 2020 to finally break out of it because it can break below the green dotted line. But as long as it stays above the green solid line, we're still in this consolidation pattern, and if you're bullish or bearish, there's really nothing you can do about it because it's not going to see the next major move, which is going to be a triple digit price move either to the upside or a massive crash of more than 50% to the downside. But we're not going to see that until it breaks out of one of these key levels, and that'll be your tell about how to trade it and about how it's going to trade going forward. But historically speaking, when you see a stock that takes off on a tear like this, like I did in 2019, where it's gone up from $30 a share to more than 150, that's a massive move. But now that it's consolidating, and it may take weeks or months, the smart money is going to be betting on a breakout to the upside, because it's like the stock's taking a rest. It got on a massive tear. Investors are really buying it for a reason. There's hype around this stock, and there's some bullish sentiment going into this position, and they understand that the future can be really bright for the company, and that's why you see a move like that. But then when the prices consolidate and everybody's taking profits, but then the smart money's coming in and accumulating more shares to benefit as the stock's going to eventually, and more than likely, break out to the upside and continue going higher. So when we summarize our chart for Roku, it's bullish. So when we come back to the three things that we really looked at today was the fundamental analysis on Roku, and it didn't really come up to our expectations. So we're not going to give that a check mark today. Instead, it's going to get a big red X because it didn't quite live up to expectations. Then we looked at the sentiment from the investment community, and that was bullish. They had it rated as a buy, so we're going to give that a check today, that it checks the box, that it's a bullish indicator for Roku. And then when we come to the chart, the technical analysis, that was bullish as well. So that gets another check. And our bottom line thesis for Roku is that it is a stock that you want to bank on moving higher. So it ends up on our bank it list today. So if you have shares of Roku in your portfolio, that's great. You have the key levels to watch, and I expect shares to continue to move higher from here. And if it's not in your portfolio, now may be a good time to take a look. Just keep in mind, as you keep an eye on those key levels, the wedge pattern is pretty wide. So we are going to see Roku continue to be a volatile stock and see some wild price moves. But as long as it stays in that wedge pattern that I pointed out on the chart, it's a stock that I remain bullish on, and I expect to break out to the upside in the coming months and to head higher throughout 2020. So now is a great opportunity to start to add exposure to Roku and to have it on your list as a stock that you want to own. Now, just a reminder, you can scroll below this video and learn how I trade stocks around earnings announcements. Remember, you don't want to gamble on a stock before they announce earnings. Instead, coming in after with proven historical analysis, you can have massive returns and even smaller moves by using options that you trade, and they're very consistent returns. So you can scroll below and learn all about that. And I just want to give you one last chance to scroll and hit subscribe. You don't want to miss out on any of my weekly content, and I'll be sure to feature new stocks and new topics each and every week. So be sure to click subscribe on my channel so that way you don't miss out on any of my market insights or my stock information. And if you missed last week's Bank It or Tank It on Under Armour, no problem. I have a link below the video as well that'll take you right to it so that way you can check that one out. So just remember to scroll below the video to view all the extra content that we have and to check out how I trade earnings. So thanks for tuning in. That's all for today, and I'll see you next week.